Ooh, what's good, my fellow stock market trader and investor homies? It's your boy, Kevin. Welcome back to the channel. There's blood in the water, folks. It's been a crazy couple of days in the stock market with the banking sector absolutely falling apart. Silicon Valley Bank, Signature Bank going under. The Fed's having to come in and save the whole thing. Banking stocks have absolutely collapsed and have crashed. Well, you know what our old pal Warren Buffett used to say? He said, when others are peeing in their pants and pooping in their diaper, that's when I want to be buying. Well, me too. I want to be buying bank stocks right now. That's right, you heard it. I think there's some really good deals in the banking sector right now. Everybody's running for the exit. Everybody's running for the door, running for the hills, calling their mom, crying on the phone, and that's when I want to be buying. There's some very good value discount deals in the banking sector right now, and that's what we're going to be breaking down in today's video, so you're going to want to stay tuned for this one. All right, to understand why I'm confident enough in investing in these bank stocks that have been absolutely pummeled, we need to understand what happened with Silicon Valley Bank and why I think it's not going to continue to happen with these other bank stocks. Well, Silicon Valley Bank right now is halted. It's suspended. No more trading going on with Silicon Valley Bank. And we heard President Biden come out and say that investors in the stock will not be bailed out. And that's part of the reason we're having contagion in the banking sector, is because investors are scared that this type of thing is going to continue to happen with other bank stocks. But here's why I don't think it will. All right, so Silicon Valley Bank, they were a bank that catered to small businesses that were backed by venture capital. Okay, so let's say Silicon Valley Bank's customers, Jim's Hot Dog Shop, Waukesha's Weaves, and Chang's Nails, they all had $50 million, and they went and deposited their $50 million at SVB, totaling $150 million. Well, when you deposit your money at the bank, they don't leave that money sitting in the vault. They maybe should. There maybe should be a debate on that, but they don't. They buy assets with your money that provide them with an interest rate. That's how the banks profit, all right? So Silicon Valley Bank took Jim's Hot Dogs money, Waukesha's Weaves money, and Chang's Nails money, and they went and took that $150 million and they bought treasury bonds, 10-year treasury bonds that were paying 1% interest. Okay? Very important. Treasury bonds are considered a really safe asset. The only way a treasury bond loses you money, really, is if you can't wait the 10 years to withdraw the money. Okay, so here's what happened. They have these $150 million of 10-year notes that they bought at a 1% interest rate. Well, Jim's Hot Dog Shop heard that Silicon Valley Bank may be having some trouble. So he went to get his weave done at Waukesha's Weaves. Waukesha was doing his hair and said, "Hey, Jim, did you hear that Silicon Valley Bank may be going under?" So Jim said, "Oh, shit." So he went to get his nails done at Chang's Nails. And he told Chang, "Dude, you better get your money out of Silicon Valley Bank because it may go under." So they all run to Silicon Valley Bank the next day, and they try to take their $50 million each out of the bank. So Silicon Valley Bank, the manager said, "Oh, shit, we got to sell these treasury bonds." So they run to the open market, and they try to sell their treasury bonds that are paying a 1% interest rate. Well, here's the issue. Right now, the Federal Reserve has jacked up interest rates so much that 10-year notes, let's say they're paying 4% right now. 10-year treasury bonds are paying a 4% interest rate. So who in their right mind is going to buy a treasury bond that's paying 1% when you could buy a treasury bond that's paying 4%? Nobody's going to do that. So Silicon Valley Bank could not sell their treasury notes to save their life, and they didn't save their life. So everybody's running to the bank trying to get their money out. Silicon Valley Bank had the assets, but they didn't have the liquid assets. So the Federal Reserve has to step in. They took control of the bank, and they're making everybody whole. And there's a lot of other banks out there in the same situation because it's a very common practice for banks to buy these treasury notes. But here's why it's not going to happen to these other banks, okay? So the federal government, the Treasury Department, everybody comes together and they make this master plan. The plan is if a bank wants to sell these junk bonds in order to move off them, they can sell them for dollar in order to satisfy customer withdrawal requests. So other banks aren't going to have this issue that Silicon Valley Bank had. Now, if they're lending to crap customers who can't pay the loans back, that's a different situation. But that's not the situation that Silicon Valley Bank was in. They had the underlying capital. They just didn't have it liquid. And that's how they got caught with their hands in the cookie jar. So the U.S. government steps in and says people with funds deposited at SVB will get their money back, and banks will be able to sell these treasury bonds to the government and satisfy customers' withdrawal requests. All right, that leads us into what stocks. Now we understand what's going on, what happened, and why I personally don't think it's going to continue to happen with other banks. So what stocks are trading at good deals right now? For a long-term investment, I really like Charles Schwab. Charles Schwab, everybody's heard of it. It's an absolutely massive bank, massive company, and it's trading at a really nice discounted price right now. If we look at the daily chart, it was trading up at $86 a share just a month and a half ago. Today, it's trading at $56 per share. So there's really nice upside potential back towards those recent highs. We were trading as low as $45 per share yesterday. So we're popping back up today. I'm going to wait for a pullback back down towards those lows, as low as we can get. I'm going to start nibbling and cost averaging in. I didn't have much of a exposure to bank stocks prior to this situation, but this dip is a great opportunity to start adding some to my portfolio. So Charles Schwab is one of the longer term ones that I want to have exposure to. Short-term swing trade, Western Alliance. Now, this is the riskiest one that we're going to be discussing. Western Alliance was trading up at $80 just a couple weeks ago, hit lows of $7 yesterday. If the federal government didn't devise that plan that we just discussed where these banks can offload those low-yielding bonds, Western Alliance would have more than likely have gone under. Okay, right now it's rallied back. It's up 45% on the day, trading at $37 a share. If this thing starts to peel back lower, I'm gonna start buying, and I'm gonna swing this thing back towards 50. My price target is gonna be $50 per share, and I'm not the only one with this plan. You guys remember Ken Griffin? Ken Griffin from Citadel and the AMC saga? Well, Ken Griffin has absolutely been loading the boat with Western Alliance Bank stock. Western Alliance Bank Corp. Form 13G shows Citadel Advisors increased stake to 5.3%. So they own 5.3 of this company. They are loading the boat on Western Alliance. I don't really like Ken Griffin. I don't like Citadel, but the guy's not an idiot, and he's not going to be buying 5% of a company that's about to go out of business. This thing's trading at $37 per share. All-time highs of $122, folks. Massive upside potential. You're talking about, what, 4x potential back to those all-time highs. Now, I'm not saying I'm going to be holding till it hits all-time highs, but that's the type of upside potential that this stock has. Western Alliance, probably the riskiest of the bunch that we're going to be talking about, but also extreme upside. All right, another swing trade idea is this FRC, First Republic Bank. First Republic Bank was absolutely waxed yesterday. I mean, this thing got... I thought this one was going to be the next Silicon Valley Bank. I thought it was headed to zero, but the feds, the Treasury Department, they saved the day. Trading up over $220 a share just a couple months ago, hit lows of $17 a share yesterday. All right, so this thing has rallied back. It's trading at about $50 a share right now. We have upside back towards that $200 level. I'm going to be swing trading this, not long-term investing it, because it is risky as well. If Charles Schwab goes under, we have issues, right? Another long-term idea, Bank of America. Bank of America highs of almost $50 a share. Right now we're trading at 28. If the likes of Bank of America go under, if Charles Schwab goes under, we have bigger issues as a country than our money. There's probably something really terrible happening if Bank of America goes under. Right? If Charles Schwab goes under, we probably got invaded by aliens. And we got bigger issues than our stock portfolio. So I'm taking a bet that the banking industry does not see a terrible collapse. Now, why it's possible, I put the percentage probability at like 3%. So if it's that low of a probability that Bank of America and Charles Schwab go under, I'm going to be placing a bet and I'll hold these things long term because they're trading at levels that they haven't traded at since 2020. And that's a steal in my book. All right, Bank of America, Charles Schwab are my two long term. Then we have FRC and Western Alliance as my two swing trades. Something else that we need to be cognizant of is the upcoming FOMC meeting and the interest rate hike announcement. Now, there is some speculation out there that the Fed may not raise interest rates at the next FOMC meeting, which I believe is on March the 22nd. But we have a percentage chance of 83% that the Fed will raise rates. I do think it's going to be that 0.25% interest rate hike. But there's also a 16% chance, and there's some really smart people out there who are saying that the Fed is not going to raise rates at all. People saying that it's going to be a 0% hike is a 16% chance, okay? So if we don't get that rate hike at the next FOMC meeting, the entire stock market's probably going to rally, right? We're going to see these bank stocks rally like no other. They're able to offload these crap treasury bonds, and they're not seeing another interest rate hike, which could help mortgages. Another big aspect to this, banks, another way they make money is mortgages, right? Well, this whole banking collapse has caused mortgage rates to fall. Mortgage rates tumble in wake of banks' failure. The average rate of the popular 30-year fixed mortgage rate dropped to 6.5% on Monday. If rates continue to drop now, buyers could return to the housing market once again. Huge here for banks, okay? So not only were they saved, not only were they able to offload their shitty treasury bonds, but now, you know, there's agents all over the country, real estate agents, who had prospective clients who wanted to buy a house, but they're going to say, oh, I just want those rates to drop a little bit. Once the rates drop a little bit, I'm going to go buy that house we looked at. Well, you know, those agents are calling those clients saying, now's the time, rates just dropped, it's time to get in the market. So I think the next earnings report could reflect that mortgages picked up and that banks are doing better than expected. So if they're able to offload these treasury bonds as well as produce more mortgages than expected, we could see a pop in banks over the next coming quarter, okay? So remember, Charles Schwab is my long-term play, Bank of America long-term play, Western Alliance, the most risky of the few, and First Republic, also extremely risky. It is a risky play all around, right? I don't feel extremely confident in the direction of the overall market. I've been trading a lot of options, direction neutral strategies where I'm selling like iron condors and covered calls, that type of thing, being really conservative in this market because I think direction is hard to pick right now. But when you get an opportunity like this, which we don't see often, when people are pooping in their pants and peeing in their diaper, calling mom, crying on the phone, that's the time we got to be buying, not when everybody else is buying. So I just wanted to talk to you guys about this, share my thoughts, my thesis, and what I'm doing with these banking stocks. They've already rallied a ton, so I'm going to be waiting for some continued downside action. This may be a little bit of a dead cat bounce or rally until we get that full follow through. You know, a healthy rally is choppy, right? You're up one day 3%, next day down 2%, next day up 2%. Day after that, down 1%. It's choppy, right? Slow move up is that healthy rally. What we're seeing right now is not healthy. It's just filled of tons of volatility. But there is action to be had, and I'll be in it. I love you guys. Be safe out there. This is not a recommendation to go buy any of the stocks that I talk about because remember, I'm way too stupid to be a financial advisor. Catch you guys in the next video. Until next time, peace.